Markets continue to rally. The Nasdaq crossing the 6,000 mark for the first time ever last month. Confidence in the U.S. economy and a surge from technology titans like Apple and Microsoft and Facebook, among others, among the big drivers. Joining us once again, Adena Friedman, CEO of Nasdaq, the first woman to run a U.S. stock exchange, making her obviously one of the most powerful people on Wall Street. And Adena, it is great to have you on the program.
Thank you very much.
So you were named CEO in January. I know you've had a lot to think about in terms of the global story for markets. How important is it that the Nasdaq reached 6,000?
Well, it's always fun to see a milestone within the index, but the fact of the matter is what we really focus on is making sure that the investors have a full set of information to be able to base their decisions on, and that they have a full range of investment opportunities available to them. I think that the Nasdaq reaching 6,000 is a mile marker, but it's really a reflection of where people think that the administration may be able to take business in the next several months or years, and investors making some bets around that.
Yeah, I'm really glad you mentioned all of that, because the Nasdaq has a big plate of services for listed companies, for non-listed companies, and you're selling that data. I want to talk to you about that in the lines of business.
Sure.
But we all know that trading has been weak. We saw the financial services numbers in this most recent quarter. You mentioned it as well in your quarter, even though you reached new heights in terms of the quarterly numbers. Mm-hmm. What's going on with trading? And talk to us about business overall.
Sure. Yeah, it has been a really interesting juxtaposition between the performance in the market, but yet still a very low volatility environment, which then equates to a low volume environment. And so it's been interesting to see what's been driving the markets to new heights has really been, I think, some more bets around kind of policy decisions as opposed to fundamental conviction purchases of individual companies. And that then means that the types of investors that are coming in and participating in the markets are more in the professional arena as opposed to the fundamental investors. It tends to be when you have fundamental investors, you have a wide range of opinions, and that therefore drives a little bit more volatility in the market, then also then drives more volume in the market. So it has been an interesting dynamic in the markets right now.
Well, you've got to operate your business, whatever the dynamic is in the marketplace, right? And okay, so we have a weak trading environment. You've got other levers to pull. Talk to us about those other levers, because you've got market data that you sell. I know I want to talk about blockchain coming up later in the program. And, of course, there's the listing business. So let me start here on the listing business. The New York Stock Exchange has been trying to, eat your lunch and take market share for a long time. This last year has been not a great year for IPOs. Talk to us about that.
Yeah, well, the first thing I would say, just getting back to your original point, is that 75% of our revenue today is in the what we call non-transactions businesses. So all of the services we offer issuers, our listings business, our data business, and then our market technology business, which we'll also talk about. In terms of the listings business, it was definitely a challenging year in terms of the total number of companies that chose to tap the public markets last year. I think Nasdaq, from a competitive perspective, did well. We had a 73% win rate overall, and 87% of all tech companies came to Nasdaq. We felt very good about our competitive position, but it was concerning that we had so few companies choosing to tap the public markets in the United States.
So what do you think that's about? And I know we'll get into regulation after a short break coming up. But you're seeing companies not want to deal with the red tape, not want to deal with the quarterly earnings. So they're saying, you know what, I'll stay private a lot longer.
Yeah, I think that there are a lot of dynamics going on that contribute to that decision, but I would give you a couple of facts. The first is we have about 1,000 fewer companies in the public markets in the United States today than we had even 11 years ago. So it has been a kind of a shift towards private. The second thing I would say is that the Jobs Act gave the ability for companies to stay private longer, because they now can have 2,000 shareholders plus employees as a private company, as opposed to before it was 500. So it is definitely allows them to stay private longer. And then there's a lot of money that's come into the private space that has given them access to capital without having to tap the public markets. But the fact is, being a public company is, it's definitely a challenging road. It's something where you have to have a lot of discipline and a lot of, you have to be ready for it. And one of the things that we've done this week is really start to talk about what has really become an impediment to the public markets has been a whole wide range of things that have been going on for decades in terms of taxes, in terms of litigation, in terms of activism, in terms of market structure, that have made it so that the public markets are not as attractive as they used to be. So we do believe that there is change that's needed to make it so that companies feel more confident and comfortable tapping the public market.
Yeah, and that market data, that information that you're offering, that you're selling, has been really vital, and it's really taking hold throughout Wall Street. I mean, market data has become a big business for financial services companies.
Well, if you think about it, transparency is a great enabler, right? So if you have transparent markets and transparency around pricing, you basically have the ability to drive different investment strategies and decisions in the markets. And it really is a huge enabler. Market data is a huge enabler of our business, and it has a lot of value. So over time, over the last decade, and I actually ran the data business for several years, we've really made sure that we've tapped into the value of the data that we have in our markets and making sure that we're maximizing the number of people out in the marketplace that can see it and access it to drive their strategies. And so it has become a big part of our business, but it's also because it's a very, very valuable part of the ecosystem.
Absolutely. It's incredibly important. On the listings part of the business, what are you doing to attract more companies? You know, I was talking to an analyst earlier. He said, look, they didn't get the Snap deal. That was a big disappointment. They've got to be doing outreach for companies. For example, are you reaching out to firms like Uber right now? I mean, the companies that you expect to go public in the next year?
So we do a lot of outreach across every company that is looking at potentially going public at some point. We try to make sure we develop a relationship with them very early on. One of the areas that we've been focused on also is the fact that the companies are staying private longer. We have created something called the Nasdaq Private Market that allows private companies to have episodic liquidity in their stock. It allows them to give early investors and early employees the chance to have some liquidity prior to the IPO, and it gives them a little bit more optionality and a better ability to manage their cap tables as they're moving themselves towards an IPO. And that also allows us to develop a relationship with companies earlier on in their life cycle.